lots of automobile manufacturers and other companies that are working diligently on autonomous driving technologies.
Which, by the way, includes 15 or so different companies, but does not include
Tesla. Yes, Tesla is the glaring omission from this consortium.
The Tesla Q podcast is for informational purposes only and is not intended for and should not be used as financial, investment, or trading advice. Research associated with fiscal decisions should be conducted elsewhere. The host of the show possesses no license or credentials to warrant accepting advice based on what is heard on the Tesla Q podcast. Additionally, even though the host and guests may hold positions in companies discussed on the show, they don't have insights into the next time step of the simulation. Therefore, do not make any financial decisions based on the contents of this podcast.
Hello and welcome to episode number 33 of the Tesla Q podcast. This is going to be an interview episode with Montana Skeptic. If you'd like to contribute to the podcast, go to patreon.com/TeslaQ podcast and become a monthly contributor. Or you could go to the Square Cash app and search for Tesla Q podcast. And without further ado, we're going to go straight into the interview. So, Montana, thanks for joining me today.
Pleasure.
And obviously, Tesla's share price has declined quite a bit recently, which is good news for us and people of our ilk, I guess. But
it's still stratospherically high. No, market cap of close to 35 billion still, or 33 billion, or whatever it is, with a company that's losing billions every year, and with declining revenues and declining deliveries. I'd say it's still a great time for anybody long Tesla.
Yes.
To exit.
People will look back on these $170+ share prices and wish that they had exited now instead of later, I'm sure. So,
the remarkable thing is that they, after the funding secured fiasco, where you had all the evidence, I think a reasonable person needed to conclude Elon Musk was not trustworthy, the share price remained above 300 for months and months. And anyone with any sense got out of town at that point. And you can see the T-Rowe price has slowly but steadily been exiting, and Fidelity as well. And it's only our friends in Scotland who are the big holders now, along with a cast of characters, smaller holders. But Bailey Gifford is who may be the biggest hit in this.
One thing that I've noted with the timing of things that I don't know that many other people have noticed is that the 5,000 vehicle per week production supposedly was hit on June 30th of last year, so right at 11 months ago. And right around the same time period was when the Martin Tripp thing happened. And then in quick succession, there was the doxing of you, and also, just before that was the Vern Unsworth thing, and then just after the doxing of you was the funding secured thing. So all those things happened in a relatively short time period. Do you have any thoughts about that timing or anything?
No, I really don't. I mean, I suspect that when Elon Musk is particularly under stress and under the influence of other things, that his behavior becomes more erratic. And I'm guessing that was such a time when he was struggling to get production up and wasn't meeting the production numbers. The story has changed so much since then. It's not a story any longer of not being able to produce enough. It's a story of not being able to sell even the lesser production you're making without slashing prices, and even at that straining to do so. So I really think this SEC settlement is hugely frustrating to him. It has constrained his ability to tweet. It hasn't, he still finds ways to do an end around, but it's really a big constraint on his classic means of manipulating the share price.
So in thinking about that time period last summer, and in thinking of this recent issue with Skabushka, which you've been helping out with, do you ever wish that you had last summer decided to just go head on against Elon Musk?
I don't know what that would have accomplished. Okay. I did and do want Elon Musk to know that I do not in the slightest fear the defamation suit that he threatened. He can sue me tomorrow. I'll accept service of process. have at it, Elon Musk. And I hope I've made that clear over the last year. I don't know what there was for me to go head to head against Elon Musk about at that time. I didn't have a cause of action against him. I had not lost my job, which I enjoy, and I have the happiness of friends in the Tesla Q community. And I did want to communicate to him that I have absolutely no fear about him bringing a defamation action against me, which is what he threatened. He can bring it tomorrow. I'll happily accept service of process. I'll welcome the opportunity because I haven't committed any defamation or libel. I'm happy to discuss with him any issues he has about anything I've written. I always have been. He's never communicated with me or had any of his agents communicate with me. He's done me actually a service in a sense because I have become kind of an accidental celebrity. The Financial Times started to digest and reprint some of my Tesla, including its phony gross margin metric and other things that I'd written. I made a lot of friends in Tesla Q in consequence of it. They're really great people, and I have actually communicated with the mainstream press far more since that incident than I ever did before it. I am in communication with reporters from, mainstream outlets all over the place who are curious to know what's going on. And so I think I have gone head to head with him. And in the case of Skabushka, I've said, you know what, Elon Musk, this accusation of workplace violence is just another example of your petty, vindictive, vengeful frame of mind that is possibly a product of your paranoia and narcissism and egomaniacal character. And I'm going head to head with him right now there. So, Elon, that's how I feel about things. I feel like I have nothing more to prove to you. And if you ever want to discuss any of this, I'm here.
So you mentioned that you still have your job. So your job now is as an investor, basically. Montana, how did you end up going from being a trial lawyer to a professional investor, more or less?
Well, I'm loath to call myself a professional investor. What happened is I represented someone from New York in a highly complex piece of federal litigation back in the 1990s. And a bunch of cases got consolidated in federal court, and we tried the case. It was a federal securities fraud case. And when you go through a year and a half or so of discovery with someone and then an actual jury trial in federal court, you get to know them very well. The people who were suing him actually ended up having a huge judgment lodged against them, and several of them ended up in federal prison thereafter for securities fraud and tax evasion because the SEC and IRS sat through the trial and listened to the evidence we had developed. And over the years, he stayed in touch with me, even though I was not in his state. And when he sold his company in 2010, I helped him sell it. And he said, listen, suddenly he had all this liquid wealth. He was, a billionaire. And he said, I have no desire to be an investor. Would you come to New York and just handle all the business and legal affairs? And I said, well, I'd love to, but I have no background in investing either. I'm a commercial trial lawyer. I see cases that are pathology, not healthy tissue, and have never been trained in finance, except, for some background in accounting. And he said, I don't care. I understand that, but I think you'll learn, and I have trust in you, so please do it. And I thought, at this point in my life, for various personal reasons, it was a compelling opportunity. So I came to do that. That's how it happened. It was, a great opportunity, accidental again.
Do you ever wish that you still got to be a lawyer and go to court regularly?
It was a lot of fun. For whatever reason, my partner and I tried a lot of cases, and she was a really hard worker. And this is after I left the big law firm where I used to work. We had our own firm for 10 years, but it was exhausting. We worked 6 or 7 days a week, And the emotional strain was huge because for so many of our clients, it was do or die. It was, we win this case or I'm out of business, I'm broke, I'm whatever. And the long hours and the stress I don't miss. The excitement of trying cases I do miss.
Gotcha. So I've got kind of a mix of questions here today, some about you specifically and some more about Tesla specifically. So I'm going to move to a Tesla question. So as much as the share price has been down recently, have you started to feel any vindication yet, or is it too early for that?
Well, I feel like the things are moving in the right direction. Vindication. Yeah, I will admit I feel vindicated. I think the share price is still stratospheric. It's still, as I said, a tremendous opportunity for people to exit and, capture any gains they might have or minimize any losses. There's a long way to go, but people still have different opinions. The outcome could be different from what I expect. So I don't want to be, one hates to be cocky, but yeah, I kind of really do feel vindicated. It's much lower, the price right now, than when I started writing. And unlike then, there is no clear, compelling path to a sustained higher price. They're big, the great promise of Tesla was this mass market car, the Model 3. And it's clear to me that the Model 3 is a total failure. It is an unreliable car. They can't make it, and sell it profitably. They've already exhausted their backlog of the high margin variants. The story in Europe is of disaffected consumers, and increasingly I think you'll see that in the US. And the only variants that they can sell in any kind of volume now cannot make them enough money to stay in business.
And apparently that vehicle attempted to kill Aladdin, which we found out about over the weekend.
Yeah, it's interesting. Some of these blue check celebrity types who are discovering that their Tesla is not everything it was cracked up to be.
So I haven't been following Tesla closely, not super closely, for more than maybe 15 months or so. How long have you been following them closely?
Probably 3.5 years or so. Not nearly so long as, for example, Mark Spiegel.
And Tesla is basically the only company you wrote Seeking Alpha articles.
It is, yeah.
About?
People used to give me a hard time about that.
All right. Based on your legal experience, could you give a roughly rank-ordered list of Tesla's biggest legal liabilities by total size, the likelihood that Tesla will have to pay them, and how imminent they might be?
That's a good question. So I think we're talking just Tesla now, not Elon Musk. I think
you could talk about Elon specifically as well if you.
Yeah, the first really big liability happens to be Elon Musk, and that's because there's now a trial setting in the Vern Unsworth case, and it's in federal court. And the federal court judges run their calendar really in a disciplined way and require pretrial orders that are highly detailed. They put a lot of burden on the trial counsel. And I think that October trial setting has a decent chance of sticking, and that the judge will be loath to grant continuances. And certainly Unsworth will be very opposed to any attempt to delay the case. And there, the judge has now gone through a motion to dismiss and written a very detailed opinion looking at all the law involving defamation and comparing it with the facts that Elon Musk's attorneys tried to get the judge to bite off on, and has rejected their interpretation, quite rightly, in my opinion. So that has a potential for huge liability for Elon Musk. It's hard to quantify, but my guess would be, certainly 7 figures, much more likely 8 figures, a large check that Elon Musk is going to have to write to settle that litigation. I think he'd be crazy to go to trial. And yet, on the other hand, he is crazy. And his borrowing right now on margin is so large that for him to say, hey, I can settle this case for $50 million, I need you to loan me more money. that may be a tough sell with his lenders. He's really in a very dicey position right now. But to me, the Unsworth case holds the greatest potential to bring down the house of cards in terms of what is out there. There are, of course, hundreds of lemon lawsuits, and they will be settled, but for relatively small amounts. There are some personal injury lawsuits, and it's hard for me to gauge how soon they'll get to trial or what the settlement calculus looks like in those. Those are serious cases, but in most instances, you're talking about damages somewhere between, say, $1 million to $20 million. So I guess doable in a stretch. For Tesla, though, it's obviously doing everything it can to conserve cash. The biggest dollar amount lawsuits are the 10b-5 lawsuits, and the biggest one there, of course, is the funding secured lawsuit. And the potential damages there are easily several $100 million. Unfortunately, or fortunately if you're Tesla, the lawyers who want to represent the class are fighting with each other, and the case is now tied up in procedural wrangling to see who will be the lead class counsel. So those cases won't get to trial for at least another year and a half, more likely 2 years. So again, I see the Unsworth case and some of the personal injury cases to be the biggest near-term litigation threats. And of course, there are potential 10b-5 cases, right?
Mm-hmm. What about the Solar City acquisition?
Yeah, that's an interesting case. That's a derivative action in Delaware. And the claim there is that Elon Musk controlled the corporation, which the court has now ruled is likely the case. It's going to let the case go to trial. It goes to, I think it's in Chancery Court in Delaware. That case will get to trial. I haven't checked the calendar there recently, but my guess is that case will get to trial either late this year or early next year. And that's a significant case because it implicates the directors. It's a case brought on behalf of the corporation, and I think really most of the liability there lies with the directors. I don't know exactly what director and officer liability insurance they have, but that case is a potential embarrassment. The problem in that case, to me, has always been damages. The trouble with the Solar City acquisition is, even though it was clearly a breach of fiduciary duty that Tesla is now paying dearly for, in the year plus after the acquisition occurred, the share price rose. So to say one was damaged by that, it's going to present a complicated damages model, and I'm just not sure where they get to with that.
Gotcha. How long do you think the Unsworth cases will take to play out, both the U.S. and the U.K. case?
Well, if he loses in the U.S., he's in deep trouble, okay? But the U.S. case is here because it's easier to prove, far easier to prove defamation in the U.K. But to collect from a U.S. litigant, the United States courts require that you prove that the defamation case would have succeeded under U.S. law. That's why there's a lawsuit here in the United States. So it's really the U.S. lawsuit that is everything rests upon. And I think it's going to play out this year. And I think you'll have a jury trial. And if there's a judgment, again, I can't conceive the case won't settle. But if it actually goes to trial, Musk risks a huge judgment against him because, Vern Unsworth will be able to go to the jury and say, here I am, just a little guy in Thailand directing this rescue, which turned out to be successful with expertise that I and only I had. And I get accused of being first a pedophile, and then he doubles down on it. And then he calls me a child rapist and destroys my reputation throughout the world. And look at all the hate mail I've gotten since then and these hateful posts on Twitter and the terrible damage to my reputation. And this man is a multi-billionaire. How can you touch him? How can you hurt him? How can you make him appreciate how wrong this is unless you write down a big number, ladies and gentlemen of the jury? That'll be the argument. And for Musk to go to court with those facts, I mean, he is an incredibly arrogant human being. But if he's that arrogant and that deluded he's making a terrible mistake. I see it getting to trial this year, and I think there's a possibility of a judgment this year.
Even with a jury
Oh,
trial?
yeah, a jury, the jury, and they'll hear testimony. I can't imagine testimony in this case takes more than a few weeks at most, okay? The federal court judge will run a disciplined trial, and the jury will hand in its verdict, and a judgment will be entered. And then Musk can appeal if he wants, but if the judgment is against him, he better post a bond, or the successful plaintiff will be able to levy and execute in the meantime. So a huge amount of peril there, especially considering the parlous margin loan difficulty that Elon Musk likely finds himself in right now.
And the current date for the current court date is somewhere like October 22nd.
Yeah, I don't recall the exact date, but it's in October this year.
Sometime
correct.
in October. Okay. All right. Moving on to a different legal action, since Tesla collects legal actions like baseball cards almost. Do you have any guess about how the SEC will view these recent email leaks that seem to me to be coordinated by Elon Musk and intentionally leaked? Even though just a month or so ago he had the email warning his employees not to leak emails, these seem to be intentionally leaked. Any thoughts on that?
Well, I think certainly the SEC could make a case that he knew or should have known that they would be leaked. The guy has run an end around. I honestly feel like the SEC has done a decent job. They blew the oral argument in front of Judge Nathan, and I've already talked about that before. People who've listened know my explanation there. At this point, I have to believe certainly the DOJ is doing whatever it's doing. The SEC has got to be asking questions about other recent things that have happened. There's the extraordinary divergence between what Musk said on the eve of the latest capital raise and then what he said in that leaked email, which we can discuss. And there's the extraordinary divergence between the business model of robotaxi that he set forth in that conference call, that restricted conference call on the eve of the capital raise, and what the prospectus materials said. They have so much to do there. The showing that he's behind the leaks is more high degree of difficulty, I think, and they see the company struggling in the financial markets. And I think rather than being the cause of it being brought down, they're going to want to be instead, the medical examiner who comes and fills out the death certificate. That's simply the reality of the world we're in, though I think Tesla faces and Musk faces serious jeopardy for some of these other problems. There will be ongoing risks which complicate, among other things, any ability of a third party to acquire Tesla, out of bankruptcy, short of bankruptcy. So that's a big, Musk has created that issue.
So it sounds like you think the issues relating to this recent capital raise are much more of a problem for Tesla and Elon Musk than the email leaks specifically.
Yeah, I do. I think that. Just to review what happened on May 2nd, he got on a conference call sponsored by Citibank and Goldman Sachs, who were two of the several, I forget, 4 or 5 underwriters for the most recent capital raise. And investors had emailed questions to the Citi or Goldman Sachs representative who hosted the call. And those questions were read to Elon Musk. There was never any follow-up, but they were read and he answered. And the very first question was, why are you raising capital now? Because he had said repeatedly, we don't, want to raise capital or need to raise capital. And he said, well, we don't really need it. We don't need it for our ongoing operations. We're going to be able to fund our CapEx out of our cash flow. This is just a buffer. Those were his words. This is a cash buffer in case there's a recession or in case there's an overall downturn in the worldwide auto market. And then a couple of weeks later in that leaked email, he says, we are burning cash ferociously. We're in deep trouble. We have got to slash our expenses. We just lost $700 million. We're going to run out of cash later this year if we don't change course. So it was obviously a totally different story from what he had told those investors who were the key big money investors who would presumably be buying the convertible bonds and the equity, capital raise. That is a major 10b5 issue. The people who just invested in Tesla were handed a beautiful 10b5 action on a silver platter. Now, whether it ever materializes, who knows? But that's a real, sort of Damocles danger for Tesla. And the second thing that happened during that call was he essentially said, people were asking, what about, for example, what's your order book look like right now? Are you going to achieve the 25% gross margin? And he became testy and irritable and impatient with those questions and repeatedly said, look, no, we're not going to make 25% gross margin. I'll feel lucky if we get to 20%, which, by the way, means, you better hope for it's 15%. But stop asking me about, the auto business. We're not an auto manufacturer anymore. We are a robo-taxi company, and our cars are going to appreciate sixfold or eightfold. And in 1 year, we'll have 500,000 or more robo-taxis on the road, and shortly thereafter, 1 million robo-taxis on the road. And while you sleep, your car will be earning you money, and this is going to turn us into a $500 billion company. Well, the problem with all that, besides it being utterly absurd, is that none of the prospectus materials for the capital raise mention any of that. They don't even use the word robotaxi. And I think that creates potential 10b5 dangers for Tesla as well.
A somewhat related question, which somewhat brought about by actions on Twitter over the weekend. Do you think Chamath, whatever the guy's last name is, who was on CNBC the very day before the capital raise on May 1st, talking about convertible bonds, and I believe he used the term risk-free in relation to the convertible bonds. Do you think he might face any liability with that appearance coming the very day before the capital raise actually occurred?
I don't think there's any legal liability associated with being incredibly ignorant and stupid and arrogant. And he's all three of those things. But I don't think that leads to any legal liability unless someone can show he was in some conspiracy with Elon Musk, which I very much doubt. I think he actually is one of these Silicon Valley types who's a one-hit wonder and who, because he succeeded with this company, Facebook, thinks he is suddenly, he's a billionaire, so he must be a genius. I've seen that syndrome many times, and he exhibits it in spades.
Gotcha. When do you think Tesla will next need to raise capital to stave off bankruptcy or to get their next buffer of cash?
Well, I don't have access to the books and records, but based on everything I see and read, I believe Tesla is highly unlikely to achieve 90,000 deliveries in Q2, which is their minimum guidance. I believe they will be forced to re-guide for the full year. It will, they're at 360 to 400K. I think that they will not achieve even 300,000. And I believe that they will achieve 80,000 in Q2 but only if they continue this price slashing and incentive offering behavior that is absolutely gutting their margins. They will have a terrible Q2 when you see the financials. No matter how almost healthy the delivery number will look, the financials will be terrible. And at the end of Q2, you have yet another fiscal cliff. You have then exhausted all the backlog in Europe. Now you're down to SR plus cars. The S and the X are being sold only with massive discounts. May in Europe is even lower than April was. And all the analysts and all the Tesla investors are going to have to come to grips with the fact that their EPS estimates and their delivery forecasts were far too optimistic. I think the cash burn is so ferocious that Tesla in Q3 will be in desperate straits. And I think that may be its last gasp attempt to raise money. And, the people who just bought these convertible bonds have seen those decline dramatically in price in no time. Fortunately, the equity Tesla issue was probably so that those very people could hedge bonds, and the The gains on the hedges may actually outweigh the losses on the bonds, but that is not a healthy place to be if you're trying to raise capital, especially in this market where the tech stocks are coming under fire and into question, and the unicorns are suddenly people are saying, wait a minute, WeWork wants to go public with, bonds trading at almost 800 basis points over treasuries. What kind of madness is this? So I think we get to dire straits in Q3. Q3, they have raise again or die. How's that?
In Q3 2019.
2019.
All right. Writing that down. That sounds about right based on my estimates. I actually, as soon as the new raise occurred in early May, and as soon as it was clear that they were only going to net about 2.4 billion of that 2.7 billion, my off the cuff estimate was that money might last them 5 to 8 months. And a few people ridiculed that and said, oh, that's whatever, 2.4 billion, that's at least 3 quarters. But I think some of those people weren't looking at the accounts payable and all the Panasonic purchase obligations and everything.
Well, we should both be impervious to ridicule at this point, right?
Yes, you got to have thick skin if you're going to take up this side of the trade. So, if there happened to be a recall of autopilot, do you think that Tesla customers would have any recourse for refunds? And what would that do for Tesla if there was a recall of autopilot?
Well, sure, they would have great claims to get a refund, and it into the Tesla share price. And whether Tesla voluntarily surrendered the money or whether there were some litigation, all those things would figure into the whole story. And, it could be added to the litigation that's already pending against Tesla. And then you have to say what happens to all those litigants. And that's a whole nother question.
So it would be a bad day for Tesla's.
Terrible day for Tesla's, especially with this. Hey, the new story is robotaxis, right? And suddenly some governmental agency says, we're tired of you killing people with this auto slaughter, and we're going to make you stop for a while until you can really demonstrate that it's actually safe, which might be, a decade from now. That would be devastating because that is the last narrative Elon Musk has left.
Other than the pickup truck, which he started.
Yeah, nobody believes that. Well, okay. A few people who will believe anything believe that.
Yes. The same people that believe that the SpaceX cold gas thrusters are going to make the new Roadster
Right, Ryan
fly.
McCaffrey was asking Elon Musk about that this weekend. Yeah.
I actually just listened to that before this interview, and Ryan sounds like a really nice guy. Like, sounds like he's a nice family man and all that stuff, but he's a little bit little bit too believing of what Elon says.
Yeah, there's a hardcore who will believe to the end and beyond the end, and that's how human nature is.
Mm-hmm. Back to some questions that aren't Tesla specific. What resources would you recommend for somebody who's maybe a beginner investor to help them enhance their abilities to understand and analyze stocks, and especially from the short side?
Okay, so it's very dangerous to be a short investor. I feel like I knew a huge amount about Tesla, and for the first 2 years I invested in it, I lost money. I've, that's so far behind me now with how great this year has been. But those were painful years, and it's so hard. The timing is very hard to get right. Markets are not rational. Short selling is just not for everybody. And I really caution against it. The books I would recommend to anybody, I thought about this because you told me you might ask me about this. First, I would say read Benjamin Graham, The Intelligent Investor, written, ago, but a very wise book. And some people say, well, value investing is dead today. It will be back. It's coming back. The second book, and again, that will give you a real understanding of so many important things in investing. And I say this having come from finance to investing, and I was so ignorant. And I'm a highly educated person, had tried lots of complex commercial litigation cases. The investing stuff is tough. Most people out there don't have the first clue about it. Most people out there would be so much better served investing in index funds. Okay. For example, a product like Wealthfront, where Burton Malkiel is the CIO. That is a great idea instead of trying to be a stock picker or a short seller or something exotic. You'll do much better over the long haul if that's what you do. The second book I would say is Daniel Kahneman's Thinking Fast and Slow, because it is a brilliant exposition of the enormous cognitive biases that we all labor under. And once you understand all the biases that you are susceptible to, and you'll see yourself in every chapter, then the important lesson is, guess what? Even if you understand and recognize these, it's impossible to change them, just about impossible. You won't be able to do it unless you're some incredibly systematic, disciplined person. So few of us are. And again, that will lead you back to Wealthfront or some similar product. And the third book I would recommend is, well, any book by Jack Bogle, okay, who is the godfather of index investing. One of them that's shorter and concise, and maybe a good place to start, is called The Little Book of Common Sense Investing. So those are the three books I would encourage anybody to start with.
Glad to say that I own the first two, but I don't have any Bogle
books.
So.
If you have the first two, you understand what Bogle's going to be saying, probably.
Mm-hmm. Thank you for that. Would you ever consider writing a book yourself about investing or your analytical methodology or philosophy?
I want to make this clear. I am not a CFA. I don't have any degree in finance. I don't have any degree in accounting. I am not qualified to give that kind of advice. The advice I just gave is this. Most of us really would be so much better off with index funds than trying to be stock pickers or short sellers or anything like that. That's just the truth. And of course, timing is also important. Right now, it may be a time to go to cash because we're engaged in this unique monetary experiment with our central bankers all over the world. Investing is always risky, but I just think it's less risky if you do it the Wealthfront way or the Bogle way. And I'm not qualified to write that book, and I'm not qualified to give anybody else advice.
What about maybe a book about your vantage point of the Tesla?
Oh, perhaps. A lot of people are right now engaged in writing books, but my story is a tiny little corner of it, and I'm confident there will be other greater books coming out soon. There's one that Ed Niedermeyer is writing that's been accepted by a publisher and will appear later this year. I'm looking forward to that.
I believe it's called Ludicrous.
Yeah. So, and Ashley Vance wrote a great book about Elon Musk. Flawed because Ashley Vance believes so much of what Musk told him, but still highly illuminating. And I know there are at least 3 or 4 other books being worked on right now, and people have read my story and know my story, and I don't think I need to write a book.
I'm sure you're going to be a character in at least
possibly,
books,
Yeah.
I would imagine that you will be. Moving back to more Tesla specific things, do you have any thoughts about Maxwell? Whether you actually believe that any of their technology is going to be used by Tesla, and maybe why there didn't seem to be any other interest from any other suitors besides Tesla?
Okay, I'll just I'll be blunt. No, nothing Maxwell does will ever be of any use to Tesla. If Maxwell has some secret sauce for the battery breakthrough that's been promised for so long, it will take years to develop, and it will be too late to save Tesla. Tesla is wed, in fact, to the most backward battery cell architecture out there, the cylindrical cell. Other automakers are moving to the pouch or the prismatic cell. Even Panasonic, in its joint venture with, I think, Toyota, is moving to the pouch and prismatic architectures. That's what the European auto manufacturers are using, the I-Pace and the Mercedes car, the EQC, the Audi, the Volkswagen cars, the Porsche will all be pouch or prismatic. I can't explain why Tesla wanted to acquire Maxwell, but nothing good will come of it. And you can see the share price of Tesla reflects the market's expectations that it was a dud deal.
One interesting thing that popped up on Twitter over the weekend was a revisiting of some photographs from, I believe, late in 2018, and a tweet from January of 2019, which included a parking lot that was housing Tesla vehicles, which just happened to be the Maxwell headquarters.
Yeah.
Before that acquisition was
I
announced.
saw Elon Bachman write something about that. That would be wild. Okay. Of course, it's Tesla, so anything is possible. But sometimes a cigar is just a cigar. It just may be that Tesla used that lot because it was in, close proximity to where it needed to be storing cars. The conspiracy theory there is Maxwell bought the cars from Tesla to inflate the Tesla car delivery Q1 numbers. Well, hell, they didn't inflate it much, did they? Because I think the total delivery number was like 63,000. So I honestly I dismiss that a little bit. It's just too far out there. Though, if Tesla were not Tesla, people would not even think to devise these theories.
Mm-hmm. Maybe it was Q4 and not Q1.
Possibly, yeah.
Do you think there's any chance that Tesla will get bought out by, I'll just say, stupid money, quote unquote?
Always a chance.
Or smart money. I guess I should say smart money first, and then be a different question.
I mean, this is the question equity investors need to ask themselves. Will somebody come along and buy Tesla? And if so, at what price? I think it's increasingly a long shot. It will be bought out of bankruptcy, but it won't be bought short of that. And here's the reason why. Anybody buying it short of bankruptcy buys with an enormous amount of contingent liabilities, including these 10b5 cases, including the derivative case, including the lemon lawsuits, which multiply like the fishes and the loaves. Now you have all these fires from batteries. That may be a problem that we'll see accelerate as the batteries age or supercharging issues become more apparent. You also buy subject to the liability that's built into the supercharging promises. It's a very expensive network to maintain and operate, and now you're giving away free supercharging yet again after Elon Musk warned that it was unsustainable to do so, but he's now been driven in desperation to offer it as an incentive again. Also the warranty issues with Teslas are enormous. It's very likely that Tesla materially understates its warranty obligations with a very insignificant warranty reserve that it now has. All these things create so many contingent obligations and problems for anybody who would consider acquiring Tesla other than in a reorganization that I have to say it will have to be very good money that would ever consider it. Are you there?
Could you repeat what? Sorry, you cut out just before you said what kind of money.
Yeah, I have to believe that the only kind of money that would ever consider it would be very stupid money indeed. I think it's unlikely.
Yeah, the on balance sheet liabilities are already what, 12 billion or more? Well, just the debt is over 10 billion, I think, and then warranties and supercharging and all that.
Yeah, plus contractual obligations. They're large, they're huge also.
So I mean, being conservative, the liabilities are upwards of 20 billion.
Yeah,
easily.
they are.
Probably closer to 30. So
I just don't think why wouldn't you wait until Chapter 11 and buy it then? You know, the brand, you buy the brand and turn it into a luxury niche manufacturer, get rid of the idea of being a mass market car, and try to be the premier luxury EV maker.
Mm-hmm. Yeah, I think my biggest soapbox in the whole Tesla saga has been that Tesla fans and Tesla longs simply don't take the time to recognize the concept of enterprise value and where equity falls in the capital structure.
They have no idea. This again is why, and it's painful to read some of these posts. You know, there's this guy Bagholder quotes, and he quotes these people at the TMC forum, and it is so apparent they have not the first clue about, you know, where equity comes in the capital stack, or even the first idea about fundamentals of investing. And it's sad. Some of them are saying, I invaded my IRA today to buy more Tesla shares at 185. And, you know, even though I'm way behind now, I'm sure it's going to go up. And it's a tragedy for so many retail investors. If you look at that Robinhood investing site, the number of retail holders there is like more than 150,000, you know, so you've got the big institutional investors methodically unloading in a very orderly liquidation as the price drops and egging on these retail investors to buy the shares from them. And that's what's happening. The people with the least knowledge are buying at the moment of greatest peril.
Along with the board of directors members who are leaving, and J.B. Straubel, the chief technology officer, who apparently doesn't believe the ARK Invest valuation model.
Yeah, I mean, you know, some of those are, of course, the 10b5-1 plans. But if these Tesla insiders really believe that value was there, they could so easily change course on those plans. And they haven't. They're just getting out while the getting's good. And Ryan McCaffrey is banging the drum, telling all the idiots at TMC, "Come on and invest some more in this company." It's at some point these cheerleaders like Galileo Russell and Ross Gerber and Kathy Wood and Tasha Keeney and Ryan McCaffrey and you know, this guy Evan X, I forget his name. They all need to be held to account for the terrible destruction they have wrought on the people who have trusted them.
Will be a well-learned lesson for many people, ultimately. Moving back to question more directly about you rather than Tesla, would you consider yourself to be an environmentalist?
Well, much more than Elon Musk. Okay. You know, this is a question that becomes so difficult to argue with people in the Tesla debate. My personal view is that EVs are not environmentally helpful. For one thing, it's a tiny, tiny, tiny part of the problem. You could convert the entire United States automobile fleet and the European automobile fleet to EVs, and it won't touch anything because they continue to build coal-fired electrical plants in China and in India. And until you address that larger problem, it's not going to help. You know, I have a much tinier carbon footprint than Elon Musk. Every day in New York, you know, in Montana, I try to live an environmentally conscious life. I have my neighbor come over and harvests the hay from my field to feed his horses during the winter and keeps down the fire risk for me and the rest of the year. And, the idea that I hate the environment is absurd. It almost causes me physical pain to see all the plastics washing down the rivers, mostly in, China or India, into the oceans. It's a terrible thing. There's so much we could do to clean up the earth. But, also on the other side of the equation, you have to say, what are the costs of making these changes? If we really wanted a carbon free source of energy, renewables like wind and solar are not the answer, because you have to have backup power for the intermittent loads. And whereas, for example, nuclear would work. There are definite downsides to nuclear. They have to be addressed. It may be that you'll need some intelligent governmental program, if that's not an oxymoron, to have a nuclear program that could succeed, because you would need a lot of standardization. Complicated question, hard to get into with people, but the idea that I or other people in Tesla Q don't care about the environment is just a canard, and it's wrong. For example, hybrids are so much more compelling from an environmental point of view, and yet Tesla has jury-rigged the California ZEV system to, in effect, penalize hybrids while promoting pure EVs. Terrible, terrible idea. I am a big fan of hybrid cars.
Like Tesla charts Volt?
Yeah, exactly. Good example right there.
Mm-hmm. I mean, 50 miles of electric range, he uses like 2 gallons of gas every 3 or 4 weeks or something.
Right. If you want to cut emissions in the city, a car like the Volt is a brilliant way to do it. The problem with forcing everyone to buy EVs is that the way you force them is to require the manufacturers of internal combustion engine cars to A, subsidize the EV makers, and B, reduce their own emissions so much that they keep increasing the cost of their car, even though emissions have dropped dramatically in the last 20 years. So the people who can hardly afford to buy a car are going to keep their old car longer. Their old car pollutes more. You're creating perverse incentives when you do this. You're actually hurting the cause instead of helping the cause. And if you want to get those old cars off the road, stop making the new cars more expensive. But people don't think it through to that level.
Yeah, nuance is a bit of a lost art in 2019. Yeah. Do you have any plans to return to writing on Seeking Alpha or Twitter?
I miss writing on Seeking Alpha, and yet I had really said everything I had to say. What more was there to say? And Twitter was a place for me to advertise content. Hey, I just wrote an article at Seeking Alpha. Go read it. That's why I got onto Twitter. Twitter has now become, and that guy El Gato Malo has written a brilliant thread about how Tesla Q is a system, and you can lop off the head of, for example, Montana Skeptic, but it doesn't, it's a hydra. 10 heads grow where that one head was. Twitter has become, instead of a place to promote content, it has become the content. You have so many bright people from different areas of expertise now writing at Twitter about, actual data, facts, analysis. It's evolved so fast into the content itself that it's extraordinary. Yes, there's still a need for other content, but the Tesla Q phenomenon has been fascinating for me to watch, and I don't feel a need to return to writing. And I also promised that, my boss, that I wouldn't ever write again. Montana Skeptic is gone. He's gone from Seeking Alpha. He's gone from Twitter, and that's the way it must be.
But he lives on with occasional podcast interviews.
Promise not to do podcasts. If I get a request to stop doing those, well, we'll have a discussion about that.
All right. I think this is going to be our last question of the interview, and it's actually from a a bit of a Tesla bull, although he said he doesn't have a position currently. But is there anything that Tesla could do that would turn you from bearish to just being neutral about Tesla over, say, the next 6 months? What would that take?
I participated in an investor conference called the Robin Hood Investor Conference in New York in October, which was a magnificent experience. It's over a 2-day period. And I was asked to be part of a panel, a Tesla bull bear debate panel. And Gordon Johnson and I were the bears, and Kathy Wood and Trip Chowdhury were the bulls. And it was a fascinating experience. And the moderator asked me, what would cause you to change your mind about Tesla? And Tesla had just reported that Q3 profit, and in the so-called miracle quarter. And I said, if Tesla were to report 4 straight quarters of GAAP profitability, I would admit I was wrong. Tesla is, in fact, a sustainable enterprise, and I was wrong about everything. And I still believe that today. If Tesla were to report 4 straight quarters of GAAP profitability, then I would say I was wrong. Tesla did report a second straight quarter in Q4, as you remember, smaller than Q3. And then
with more deliveries.
And then in Q1, with fewer deliveries, it lost, about double what it had earned in those 2 quarters. Well, maybe 40. It lost, it lost more than it had made in those 2 quarters plus some. The moderator asked that question of everyone on the panel, and Trip Chowdhury said it's inconceivable that I could be wrong, and Kathy Wood said nothing could make me change my mind. I have battle tested our model, our financial model, and my bear case of 400 is as conservative as it could possibly be. So nothing ever could change my mind. Now we're 6 months later, and I have to say, over the next 6 months, what could make me change my mind? Okay, if Tesla delivers 100,000 cars in each quarter, so it could come close to meeting its full year guidance, have a chance, an outside chance, because another 100 in the fourth quarter would bring it to 360. And if it were profitable in both those quarters, then I would admit I'm wrong.
Yeah, the 4 straight quarters clock got reset substantially with quarter one.
And shorting should never be based on valuation, but Tesla remains a great valuation short. That's not a reason to short a stock. It's dangerous because, the cult lives on.
Yeah, I think in the Adam Jonas call from the week before last, I think he mentioned something that Tesla Q's said on numerous occasions, that on an EV to sales basis, if you adjust for the enterprise value of Tesla and compare it to other automobile manufacturers, the equity would have to have a negative value. The equity could have a negative value, and it would still be double the EV to sales multiple of like Toyota. Or BMW.
That was an amazing Adam Jonas call. It was more bearish than anything any Tesla bear could have said and be believed,
Mm-hmm. That's actually been what I've intended to do my next episode on, and use some of the lyrics from the Weezer song "My Name Is Jonas," but I've not actually finished listening to the call yet or reading the transcript that Paul Hootner put together.
Listen to the call while you look at his transcript. It's an amazing event.
Do you want to flip the interview and ask me any questions? I don't know if you're prepared, if any. I don't know if I'm prepared to answer.
Yeah, well, what advice would you give to anybody considering at this point going short Tesla? How would you tell them to do it? Would you tell them to do it? And if you would, in what time frame, with what numbers?
First of all, I would try to vet their investing acumen. I would see if they had any idea what an enterprise value was versus market cap, which is just the equity, the share price times the number of shares. That would be a starting point. If I became confident that they knew what an enterprise value was and could grasp that concept, then I would go from there and try to show them some comparisons of the enterprise value to sales multiples of Toyota, BMW, Ford, GM, other automobile manufacturers. I would also try to inform them about the PAVE coalition. I forget exactly what the acronym stands for, but it's a coalition of lots of automobile manufacturers and other companies that are working diligently on autonomous driving technologies.
Which, by the way, includes 15 or so different companies, but does not include
Tesla. Yes, Tesla is the glaring omission from this consortium. Waymo's in it, GM Cruise's in it, Toyota's in it, Volkswagen, Ford. Basically, every other major auto manufacturer is part of this coalition, and Tesla's not. So I would point them in that direction, and just the autonomous space in general, and point them to Elon's comments about the companies that are using LiDAR being doomed.
No. I want you to tell a Tesla bear, a would-be Tesla bear, how you would invest. What do your Tesla investments look like?
My current Tesla investments are all put spreads along with some very, very speculative near-term bankruptcy puts. So over the months, I had used bankruptcy puts far too much, and I'm actually down still overall on my Tesla short position over the course of the last 10 months or so. But I'm getting closer to even.
So
I only started the put spreads within the last 6 to 8 weeks or so, and those have actually been doing much better.
Listen, I like call spreads a lot and use them, and for puts I buy puts, but I pay dearly for them because I buy puts that are in the money and long dated. They cost a lot more, but time works in your favor, and they've been a great thing for me to have, and they're sleep at night kind of things. And the so-called, as you call them, bankruptcy puts, I think Elmer Fudd calls them shit puts. That's a riskier proposition, but they're cheap.
Yes, those are. Yeah, they're very cheap, and you can buy cheap put spreads too that are far out of the money. The put spreads that I've been most successful with recently were the ones that were much closer to being in the money.
Okay, so last question for you.
So this is still a bit of a learning process for me.
So here's a question for you. What makes Elon Musk tick?
What makes him tick?
What is he thinking? What is he about? What's going on with that guy?
Well, I think you have to go back a long ways. I think what makes him tick is the idea that I think he believes that he's a bit of a genius. And I think this kind of relates to what we were saying about Chamath earlier. The fact that Chamath made that money by being an early investor in Facebook, I think has somewhat skewed his own view of himself. And I think that's probably happened to a far greater extent for Elon Musk. And one thing that I didn't really realize until maybe 4 or 5 months ago about Elon Musk is that his family has been wealthy for a very long time. So whenever he left the University of Pennsylvania and was going to go start his graduate program at Stanford in supercapacitors or whatever, which was he actually admitted to Stanford or not? That's a question that has been asked. But due to the fact that his family was already wealthy, him making his money with Zip2 or X.com or whatever it was, and then PayPal, I'm not sure he actually had to take the level of risk that a true, fully bootstrapped entrepreneur would have to take to have put himself in that early position in his early to mid-20s when he became a 100 millionaire at the age of something less than 30, if I'm not mistaken. So I think he gets more credit for being an entrepreneur and business starter than he deserves. Even going that far back to when he was right out of his undergraduate degrees from the University of Pennsylvania, which is the same school that Ross Gerber went to. And I think there's a few other prominent Tesla bulls that also have a pin connection, which I've noted. So I think his view of himself as an innovator, entrepreneur, super genius has gotten overinflated. And I think over the last decade, as the Marvel movies have become so popular with Iron Man and everything, I think that's just exacerbated the issue to an extreme degree.
Yeah. If you read that Ashley Vance biography, which I trust you've done, the trail of human wreckage he has left in his wake is stunning. The people who failed to say yes quickly enough, the people who voiced doubts about what he insisted must be done, the people who had qualms about the ethical corners he wanted to cut. His raging fits of fury are epic, and I can only imagine how deeply unpleasant it must be to work at Tesla right now. And it is certainly no surprise that we have seen the extraordinary exodus of managerial talent from that company, and I expect there's more to come. By the way, where is J.B. Straubel these days? So listen, we've gone on long enough, right?
Yeah, we
all right.
Covered all my
Enjoyed
questions.
It. Have a good evening.
Thanks for joining,
all right,
Montana.
My pleasure. Bye.
All right, talk to you later. All right, that was Montana Skeptic, and this has been episode number 33 of the Tesla Q podcast. I actually haven't read the Ashley Vance biography of Elon Musk yet, but I'm going to put that on my list of future books to read. I did read the Charles Duhigg Wired article about it. The name of the article was something to the effect of Dr. Jekyll and Mr. Hyde in regards to Elon Musk. But I hope you enjoyed the interview. I didn't plan in advance to turn the tables on things, but I thought that was a fun little part of the episode. Hopefully I can get the two audio files mashed together in a good cohesive manner, and hopefully all the early parts where Montana cut out a little bit aren't too tough to follow. If you want Shorty merchandise, go to evacuationboy.com. And if you would like to become a contributor to the podcast, go to patreon.com/TeslaQpodcast. And I appreciate you listening, and have a good day. Bye-bye, everybody.